Now, the recent call for an increase in local oil refining comes at a critical juncture for Nigeria as the International Monetary Fund predicts a surge in fuel and electricity subsidy payment that could significantly impact the country's budget deficit in 2024. This call underscores the pressing need for Nigeria to boost its domestic refining capacity to mitigate the escalating financial strain caused by subsidies. Experts said by ramping up local refining operations, Nigeria can reduce its dependence on costly import, enhance energy security, and boost its fiscal resilience against volatile global oil prices and subsidy obligations. And let's get talking now. I'm joined by partner and head of arbitration and commercial litigation practice at law firm of Tayo Oyetibo, Mr. Mufeshamo Tayo Oyetibo. He joins me now live via the Zoom call. Thank you for your time. We appreciate you. Starting off, how significant is the IMF's forecast on the impact of fuel and electricity subsidies on Nigeria's budget deficit? And what does this signal for the country's economy?
Thank you very much for having me. What I think that does for the economy of the country is it reduces the ability of the government to spend money on its priority items. If you're having to spend money on subsidizing power sources, basically, which really, in the way that Nigeria runs now, does not necessarily go into high-level productivity items, then you reduce your ability to spend those same resources because those resources are finite. To spend those same resources on the priority items that you have in the healthcare space, in the infrastructure space, in education, you can't spend that money there. And so there's a direct relationship between those increased subsidies and your ability to spend on the priority items that are supposed to assist with moving the economy forward, which is really what the present government's priority is said to be.
There's a call for increased local refining in Nigeria, especially in the light of the IMF's prediction that fuel and electricity subsidy payment will contribute to the country's budget deficit in the 2024 fiscal year. So talk to us about how Nigeria can leverage local refining to enhance energy security and especially to reduce budget deficit caused by some of these macro economic environment challenges.
Well, I think local refining will help to do one thing. It will help to reduce the cost of what it takes to take raw product, which is the crude, out of Nigeria and have it refined abroad and then brought back. I mean, there's the issue that we have always had for a long time about our local refineries, those that are government-owned anyway, not operating optimally or not even performing at all. And so definitely one of the things that we need to do is to be able to have more of that value chain from the raw material of the crude oil to the finished products being produced or refined and then, sold locally. The question now is whether we're going to see a significant gain in that respect when we do that. There's an argument also that crude is sold in US dollar. And so the fact that maybe you refine it in Nigeria may not necessarily mean that you have significant gains in the consumer price at the end of the day, because those refineries are still going to buy the products in dollar, and they need to source dollar to buy those products. And to the extent that the exchange rate continues to remain high, landing that product to the consumer would occur at a high price. And that's where the subsidies come back in. So I think that's the tension that we see now in terms of whether you can have investments going into those refineries and whether we will see the knock-on effect of a lower price of petroleum product to the consumer, which is really what the subsidy is there to take care of.
Let's discuss the role of private initiatives like Aliko Dangote Refinery. I mean, in the year or in the last month, he spoke about how that he was going to, cut down on the price of diesel and all of that. And if you listen to him speaking at the Africa CEO conference last week, Friday, he was talking about how Nigeria don't or does not need to import petrol by June, or wouldn't have to import petrol by June, highlighting the potential impact of its refineries' capacity on meeting West Africa's fuel demands. Speak to us. How significant is Dangote local refining in the demand for energy in Africa?
Well, I mean, it's a 600,000 barrel a day facility. And so the hope of everybody is that it can operate at full capacity in a way that can provide value to Nigeria and to the surrounding environment. It's a very challenging endeavor to be able to do that on a consistent basis, and whether that is what happens, I think is left to be seen. If Dangote refinery works optimally at 600,000 barrels a day, I think it goes without saying that Nigeria may not need to import product into the country again. But there's so much that goes into that value chain, right? And so there's the entire crude that is produced by Nigeria is not entirely owned by the country. There are partners in that value chain also who, for one reason or the other, may want their products refined at a different location, because some of them may own their own refineries outside the country. And so you have to contend with some of those issues. But I think one thing that is clear is that if we have a full functioning large-size refinery like that in Nigeria that is working, we're bound to see something happen different. And what that different means, I think, is what everybody is hoping would be positive difference, in the sense that we don't have to import product in the way that we do now, and that hopefully we may see some price benefit in that respect as well, because if we minimize the cost points in the value chain. So I hope that he is right. Whether also the timeline is achievable is another thing. But again, like I said, I hope that he's right and that it can be achieved as quickly as he says that it can. But yeah, those are the things to think about, I think, in terms of the challenges with getting us over that line within that time frame.
Apparently, Dangote refinery has become a force to reckon with when it comes to energy markets in Nigeria and, of course, across West Africa. But let's talk about the bigger picture. One will say Nigeria is an entity on its own. It's a country and doesn't have to depend on Dangote refinery, to have sufficiency in this product. Talk to us. How can Nigeria position in the global energy market as a force?
I think for Nigeria to position itself in the global energy market, we need to solve some very critical problems. One is the production problem. And so I saw an article today saying that we're heading towards 1.7 million barrels a day. That number, in the past, we were doing between 2 million and 2.2 million barrels a day. We haven't hit those heights in quite some time. And so you need some, consistency and guarantee of a high level of production of the product, because you can't come to the table and speak at a high level if you cannot guarantee a high level of supply of your product. That's what gives you leverage in those conversations on an international on an international level, right? And so I think we need to deal with the reasons why we are not able to have a sustained level of supply, which is the issues of insecurity in the Niger Delta, the issues of investments in the upstream oil and gas sector. The federal government has done quite a bit of work recently with some of the executive orders that the president has signed, which have been designed towards, speeding up investments in that sector. Investments have dried up a little bit in the last few years, and we need to see those investments try to come back in, and so that we can have a build-up of our production capacity. If you don't have that, it's difficult for you to speak when others are speaking at an international level, because you don't have the supply to give you that leverage in those conversations.
I'll take it back to what, the IMF predicted, that, of course, fuel subsidy, and of course electricity subsidy is going to impact on budget deficit in 2024. If you recall, the government during the budget presentation last year, they did talk about how they were going to generate about 18 trillion naira in 2024. Speak to us, how close are we getting in terms of revenue generation? And if you look at, the oil market in the international market now, it seems fair. Can we cash on that to our advantage as a country?
I think that we can, but it ties back to what I just said about production. Oil is the largest foreign exchange earner for the federal government. And so if you cannot maximize your star player asset, then you cannot maximize your earnings in that respect. The government makes money from other sources. You have, foreign direct investment coming in. You have FPI inflows coming in. But what gives you that volume revenue is still oil in terms of foreign exchange. I think also we keep saying diversify our economy. We speak about these things all the time. They're buzzwords in discussing this topic, right? But I think that what the government needs to do to be able to generate that inflow, to be able to feed that budget properly, is in many areas where government seems to be standing in the way of private investment. You need to have government move out of the way a little bit and allow private sector initiatives to drive certain revenue sources for the government. And so the government doesn't necessarily have to be bogged down or tied down with spending its own money on running certain infrastructure in a certain way. And you can make money from it. One very easy thing is, for instance, the airports. There's no reason why federal government of Nigeria should be spending its limited resources on running airports. In other countries, we've seen how private sector run airports can generate good money for the government by way of taxes and royalties that are paid to the government. And so those are some of the ways where charity begins at home even when it comes to money, right? So before you can start thinking of how can I make more money, you need to think of how can I spend the money I have a bit better. And that way you will see that you can deal better, you can perform better with your budget on a year-to-year basis. And it's not always just trying to find where can I squeeze some money out of stone from. There's some money already in your pocket. You need to know how to utilize it more efficiently.
Let's talk about, you've highlighted some issues, peculiar challenges that we face. But of course, we do know that those challenges, we've talked about them over and over again. But let's wrap up with these. What is your message or your recommendation will be when it comes to addressing some of these challenges, in the immediate? The oil revenue, the country is not making much money as it ought to be. So if you look at the revenue that we're talking about, it looks like the government is too far away from meeting the target. Yes, the half of the year is almost gone. Speak to us in terms of policy. Do we say it's about policy implementation? What should be the government or the focus of the government in the immediate?
I think the focus of the government in the immediate should be one, security. If you want to increase oil output, that place needs to be, the place where the oil is being produced needs to be safe. It needs to be safe for people to live and work. It needs to be safe for people to be able to put their investments in. Two, I think the government needs to be consistent in its policies and in its execution and implementation of those policies. You don't want to say something today and do something else tomorrow, because investors don't like that. It makes them scared that their investments are not going to be treated in a way that they can guarantee outcomes on the other side, even if they're going to make a loss, right? They need to know that this is what the rules of the game are and what the rules of engagement are, and they want to be able to play the game on that basis. So the government has done some good work, as I said earlier, with the executive orders. Additional steps need to be made in terms of legislative amendments to give those executive orders real teeth and to give more comfort to the investors and the big players in that sector to know that, okay, now you have gone beyond just writing it at the executive level. It has gone through the legislative process, and it has now become law. So I can take strong investment decisions based on what I know the law is now, and that law is not going to change for the foreseeable future. I think if you can guarantee some level of stability and consistency, you'll see some more confidence come back into the system. Because what we need now is investor confidence, and money follows confidence. So I think those are the things, in terms of the things that can be done in a short space of time. I think those should be some priority matters for the government.
All right. I think a good place to leave you. Thank you so much for your time, partner and head of arbitration and commercial litigation practice at law firm of Tayo Oyetibo. Thank you for your time, Mr. Mufeshomo Tayo Oyetibo.
Thank you for having me.